We waited, then we waited some more, and honestly, we started thinking it was just an urban myth. But it's official. NHR 2.0, also known as IFEC, is finally here, and yes, it's ready to roll. Today, we're going to unpack this new regime: who qualifies, what you gain, and how to avoid major mistakes when applying. Let's start by answering the obvious. What is NHR 2.0? In short, it's an updated tax incentive for people moving to Portugal and working for Portuguese companies. Compared to NHR 1.0, it's more focused, stricter, and involves more documentation. However, it also offers several tax advantages. You'll need to meet more requirements and interact with multiple institutions, but the benefits can be significant if you're eligible and play it smart. That's why we've prepared this guide to walk you through everything you need to know. Let's run through a quick 6-step test to see if you're eligible for NHR 2.0. Number 1. Have you benefited from NHR 1.0, the return program, or the Youth IRS? If yes, you're out. Have you lived in Portugal in the last 5 years? If no, it's good news. Are you willing to become a Portuguese tax resident? Well, it's fine, but keep in mind that it means being taxed over your worldwide income. Do you work for a Portuguese company or institution, specifically one that fits the routes outlined in the law? Do you perform an eligible profession within that company? And finally, do you hold the required academic qualifications? Well, if you tick all 6 boxes, you're on the right path. Now it's time to prepare documentation and keep an eye on the deadlines. Remember, if you become a tax resident in 2025, you must apply for your NHR 2.0 status by the 15th of January of 2026. Now let's talk about benefits, and there are a few strong ones. First, a 20% flat tax rate on employment and freelance income earned in Portugal. Second, the golden rule, an exemption from tax on most foreign income, including salaries, dividends, rental income, and capital gains. However, these are used to calculate your overall effective rate. Also, there are some important red flags. Pension income, no NHR benefit. Standard taxation applies. Portuguese sourced income outside eligible work, standard PIT rates apply. And yes, even if you're an NHR 2.0 beneficiary, you still need to declare your worldwide income. Also, if you earn income from a blacklisted jurisdiction, brace yourself. There's a 35% aggravated rate that applies on those capital gains and investment returns. Let's go for the big question. Who exactly qualifies as an NHR 2.0 beneficiary? The most relevant routes include professors and researchers in higher education, CEOs, managers and directors in specific industries, IT professionals, scientists and engineers, doctors and healthcare workers. Also, directors and producers in film, media industry, and also specific finance professionals can be eligible. All these roles must be exercised in eligible companies, often with an export activity or recognized economic importance. And let's not forget, Portuguese startups officially certified by Startup Portugal are also valid to provide their employees the ability to apply for NHR 2.0 benefits. It's a lot, but we'll guide you every step of the way. You can also check our website for more information. What if you don't qualify for NHR 2.0 benefits? Don't be sad. Portugal doesn't rely on a single tax incentive. In fact, there are several. For instance, young professionals under 35 can get personal income tax breaks of up to 100% in year 1. There is also the return program. If you left Portugal for more than 5 years, you might qualify for a 50% tax break. Also, there are investment and estate planning tools like insurance wrappers that can optimize long-term wealth. And if you're into crypto, good news! Capital gains on long-held assets more than 365 days are exempt. Let's take a closer look at the return program. The return program is open to people who become tax residents of Portugal by 31st of December 2026, have not been tax resident in Portugal in the previous 5 years, but were tax residents in Portugal before that 5-year gap. Beneficiaries must also have a clean tax record and have not applied for NHR 1 or NHR 2.0. And what's the perk? A 50% exclusion from taxation on employment and freelance income, although capped at 250,000 euros per year for 5 years. Even better, no application is required. It's automatic if you qualify. According to our experience, sometimes people leave Portugal but forget to update their tax address with the tax office. In that case, we can assist you by applying for a retroactive change of tax residence, a step we've successfully handled many times. There is also the Youth IRS, an extended personal income tax regime for young workers, granting exemptions on working income, from employment and self-employment for individuals up to 35 years old. This benefit can apply for up to 10 years. The income eligible for the exemption is, however, capped at 28,000 euros. Bottom line is, there are many ways to optimize your move to Portugal. The key is knowing which program or incentive best suits your profile and financial situation. For example, NHR 2.0 or IFEC brings both opportunities and complexity. In some areas, like foreign capital gains, it's even better than NHR 1.0. But remember, it's a new regime and the fine print matters. At the end, whether you're applying for NHR 2.0, exploring the return program, or planning your move another way, make sure you're getting the right advice. A single mistake can undo the entire benefit, and that's where our team comes in. So, whether you're looking for the best tax regime, investment opportunities, or just trying to figure out where to get reliable tax advice in Portugal, we're here to help.
Newco, we know how.